Welcome back to Smart Currency Tube and to our episode on beating inflation. Today, we're diving into a topic that affects all of us: how to navigate the rising costs of living and protect our hard-earned money. Inflation can feel overwhelming, but understanding it is the first step toward taking control of your finances. In this episode, we'll explore practical strategies to help you not just survive, but thrive in an inflationary environment. We'll cover various approaches, from smart budgeting techniques to investment options that can help your money grow even when prices are on the rise. You'll learn how to adjust your spending habits, identify inflation-resistant assets, and make informed decisions that can safeguard your financial future. Understanding inflation is crucial because it impacts everything from grocery bills to housing costs. By grasping how inflation works, you can make better choices that align with your financial goals. So, whether you're a seasoned investor or just starting to manage your personal finances, this episode is designed to equip you with the knowledge you need. Get ready to take charge of your financial journey and discover effective ways to beat inflation. Let's jump right in. Inflation is the rate at which the general level of prices for goods and services rises, leading to a decrease in purchasing power. It's typically measured using indices like the Consumer Price Index (CPI), which tracks the price changes of a basket of consumer goods over time. When inflation rises, each dollar you have buys fewer goods and services, making it essential to understand its implications on your finances. Historically, inflation has fluctuated, with periods of low inflation followed by spikes, often influenced by economic events, policy changes, or global crises. Recently, we've seen significant inflationary pressures due to supply chain disruptions and increased demand, causing prices to soar in various sectors, from food to housing. The impact of inflation on savings can be particularly concerning. If your savings are not earning interest that outpaces inflation, you're effectively losing money over time. For example, if inflation is at 5% and your savings account offers only a 1% interest rate, your purchasing power diminishes. Everyday expenses such as groceries and gas also become more burdensome as prices rise, forcing consumers to adjust their budgets and spending habits. Understanding these dynamics is crucial for making informed financial decisions in an inflationary environment. As inflation continues to rise, it's crucial to adjust your budgeting strategies to account for these increasing costs. The first step is to review and revise your monthly budget. Take a close look at your income and expenses to identify areas where adjustments can be made. This proactive approach will help you stay on top of your finances and avoid any surprises. Next, prioritize your essential expenses. Focus on necessities like housing, utilities, groceries, and transportation. By ensuring that these critical areas are covered, you can create a solid foundation for your budget. Once you've accounted for the essentials, consider cutting back on non-essential expenses. This might mean dining out less frequently, canceling unused subscriptions, or finding more affordable entertainment options. To make budgeting easier, consider using tools and apps designed to help you track your spending effectively. Apps like Mint, You Need a Budget, or Pocket Guard can provide insights into your financial habits and help you stay within your budget. These tools often allow you to set spending limits and receive alerts when you're nearing those limits, making it easier to manage your finances in an inflationary environment. By implementing these strategies, you can navigate rising costs with confidence and maintain control over your financial future. When it comes to combating inflation, having a solid investment strategy is essential. One of the most effective ways to protect your wealth is by diversifying your investment portfolio. By spreading your investments across various asset classes, you can reduce risk and increase the potential for returns, even in an inflationary environment. One option to consider is inflation-protected securities, such as Treasury inflation-protected securities, TIPS. These government bonds are designed to increase in value with inflation, ensuring that your investment keeps pace with rising prices. TIPS can provide a reliable income stream while safeguarding your purchasing power. Another avenue to explore is real estate. Historically, property values tend to rise with inflation, making real estate a popular choice for investors looking to hedge against rising costs. Whether you invest in rental properties or real estate investment trusts, REITs, this asset class can offer both appreciation and rental income that often keeps up with inflation. Additionally, commodities like gold, silver, and oil can serve as effective inflation hedges. These tangible assets often retain their value during inflationary periods, providing a buffer against the eroding purchasing power of cash. By incorporating these strategies into your investment plan, you can better position yourself to weather the impacts of inflation and secure your financial future. As inflation continues to rise, finding ways to boost your income becomes increasingly important. One effective strategy is to seek additional income streams, such as side hustles. Whether it's freelancing, tutoring, or selling handmade crafts online, side gigs can provide a valuable financial cushion and help you keep pace with rising costs. Another crucial aspect of increasing your income is negotiating your salary or asking for raises. Many people overlook the power of advocating for themselves in the workplace. If you've taken on additional responsibilities or have consistently delivered strong results, don't hesitate to discuss your value with your employer. A well-prepared conversation can lead to a salary increase that reflects your contributions and helps offset inflation's impact. Additionally, consider exploring online platforms that offer freelance work or gig economy opportunities. Websites like Upwork, Fiverr, and TaskRabbit connect you with clients looking for various services, from graphic design to home repairs. These platforms can be a great way to leverage your skills and earn extra income on your own schedule. By diversifying your income sources and actively seeking opportunities for financial growth, you can better navigate the challenges posed by inflation. Taking these steps not only enhances your financial stability, but also empowers you to achieve your long-term financial goals. In today's inflationary environment, adopting smart shopping strategies can significantly help you save money. One effective approach is to utilize coupons, cashback apps, and loyalty programs. Many retailers offer digital coupons and cashback incentives that can add up to substantial savings over time. Apps like Rakuten and Ibotta make it easy to earn money back on your purchases, while loyalty programs often provide exclusive discounts and rewards for frequent shoppers. Another strategy to consider is bulk buying and shopping during sales. Purchasing items in larger quantities can lead to lower per-unit costs, especially for non-perishable goods or household essentials. Additionally, keeping an eye on seasonal sales and clearance events can help you stock up on items at reduced prices, maximizing your savings. Price comparison is also a crucial tactic in smart shopping. Take the time to compare prices across different retailers, both online and in-store. Using price tracking tools like Honey or Camel can help you monitor price fluctuations and alert you when items drop to your desired price point. This way, you can make informed purchasing decisions and avoid overspending. By implementing these practical shopping strategies, you can stretch your budget further and mitigate the impact of inflation on your everyday expenses. Smart shopping not only saves you money but also empowers you to make more informed financial choices. As we wrap up our discussion on beating inflation, let's recap the key strategies we've covered. We explored the importance of adjusting your budget to account for rising costs, emphasizing the need to prioritize essential expenses and cut back on non-essentials. We also discussed smart investing techniques, including diversifying your portfolio and considering inflation-protected securities, real estate, and commodities as potential hedges against inflation. Additionally, we highlighted ways to increase your income through side hustles, salary negotiations, and freelance opportunities. Finally, we shared practical shopping tips to help you save money, such as using coupons, cashback apps, and price comparison tools. Taking proactive steps in your personal finance journey is crucial, especially in an inflationary environment. By implementing these strategies, you can better protect your financial future and maintain your purchasing power. If you found this episode helpful, we encourage you to subscribe to our channel for more valuable content on personal finance and money management. Don't forget to like this episode and share it with friends and family who might benefit from these insights. Your engagement helps us create more informative content that empowers you to take control of your finances. Thank you for listening, and we look forward to seeing you in our next episode.